Now, how do you tell an AI model to forget?
Yeah.
So there's something called machine and learning.
Really?
That can cost, on smaller models, it's about, I think, $3 to $4 million
To unlearn.
to unlearn your data, Oscar's data. Now imagine models as big as ChatGPT. These large language models
Yeah.
could be. I saw. I don't know if it's verified, but I did read that somewhere it's about 100 million USD, 50 to 100 million USD
Yeah.
to unlearn.
Yeah.
I've spoken to a few organizations
Yes.
in financial services.
Yes.
Some in insurance, majority in insurance, but a few banks.
Yeah.
And when you talk to them about their AI strategy, how they want to go forward, there's a first misconception I always get is people always say, oh, we have a lot of data, so we're going to hire a data scientist. I'm like, well, first of all, maybe get a data engineer to clean up your data.
For you to actually be able to create an efficient AI model, you need, for example, perfect place to take it. Apple
Yeah.
Credit and Marcus by Goldman Sachs and MasterCard partnered recently to roll out a credit product. A billionaire investor tweeted that him and his wife had a joint account, but he had 10x more credit than his wife. Why do you think that is?
It's a bias.
It's a bias.
It's a bias.
It's an outright bias.
There's a time the world lost $1 trillion. The New York Stock Exchange. Luckily, they had a jailbreak.
I think M-Pesa masks a lot of our inefficiencies. Just the M-Pesa service alone, if you tie it away from financial services in Kenya, you'll just see a huge naked, where the emperor has no clothes. The only clothes are M-Pesa.
I'm curious. Explain more.
Yeah.
I'm very curious.
Yeah, like, I think...
Welcome to Minded Machine Africa, unlocking the potential of AI in Africa. Today we are discussing finance and artificial intelligence. Finance could be considered one of the key drivers for economic growth, and now AI is coming in and challenging that position. We're going to look at how these two industries are collaborating and sort of what's the give and take that's going on. I'm joined by Oscar, one of my closest friends. We've worked together from Triple O.
Yeah,
We've
we
not
did.
seen each other for a few years.
Yeah, we haven't.
You jetted off.
Yes. To do a master's in finance.
Yes.
So I'm really excited to be here. Michael's excellent work at Mind Over Machine has been noticed, and it's a huge honor to grace this platform. I'm even, to be honest, guys, I'm shocked. Michael and I used to talk in the office, but we didn't know that both of us would somehow end up setting up our own podcast. So it's really, really, I'm really excited to be here. And and I think this is an opportune conversation.
Definitely.
Especially in the African context. So shout out to anyone who's involved in putting this up.
Yeah, I think so too. So I think we can start off with maybe give us the financial background of how does Africa look from a finance perspective. And then given that the fact that we are a majority at this stage, Africa is just a net consumer of artificial intelligence. So what are some of the slight changes we are seeing where Africa is sort of now using its financial muscle, little financial muscle it has, to push into AI, and what is AI doing for the financial industry?
Okay, that's a fantastic question, first of all. As we step into what the landscape is when it comes to Africa in finance, I think one of the largest problems is financial inclusion across Africa. A significant percentage of Africans are unbanked and are financially excluded for one reason or another. Obviously, there is, security concerns and a lack of trust when it comes to banking that AI has started to solve, a problem that AI has been solving. Even communicating banking and financial services to Africans is something that I don't think has been effectively done. Finance is somewhat inaccessible from an information point of view. And we're seeing things like chatbots, smarter applications of AI in banking to kind of create that communication and that relationship and trust between consumers and people who provide financial services. From an asset management perspective, we are also seeing the uptake of asset management services, investment by high net worth individuals in bespoke financial instruments like bonds, equities. The capital markets in Africa are largely considered illiquid. So that means that there's a lack of education, there's a lack of knowledge, there's a lack of information, and there's a lack of uptake in that sector as well. Insurance, only 2% of Kenyans where we are right now are insured. What does that mean? That means
God is our insurance.
God is our insurance, as was said on set. So yeah, what that means is there's an opportunity there for AI to make things like insurance. In fact, there was an Oliver Wyman report I read this morning about AI and making inroads in insurance and kind of opening up that industry in terms of risk allocation, risk mitigation, risk assessment that AI can actually solve for us as Africans. So the gap for AI in finance is quite huge, as you've heard.
Yeah.
But I think we're perfectly stacked we have the perfect tech stack, especially financial technology stack, to kind of take on those specific advantages that AI is providing us right now. So if I was giving a bird's eye view, that's how I'd give it.
Yeah, I like that you touched on that portion of knowledge and information. I think for me, the thing that has bugged me a lot, having worked in banking and in fintech, was I think there was a lack of financial literacy being given to people.
Yes.
Like, it's just shocking how much, when you're in the system, you don't really know how bad it is outside the system.
Yeah.
Once you're outside the system, you realize sometimes even to use certain products and services, the level of literacy that you need, just financial literacy, is shocking.
Yes.
And then it's written as if you are in the system. As a bank, when I would read some of these products and services the banks are offering, at that time, I could understand. A few years outside banking, I don't understand that. I'm like, why is it so complicated? As in, they need to make it simpler. Yeah. I think when you said like the communication aspect of the chatbots, it can even be taken a step further.
Yeah.
Where you can actually call a bank for free, talk to a chatbot, let it give you financial literacy in English, Swahili, or in your mother tongue.
Now you get it. That's exactly the application for OVA. That's the gap.
And then that takes the unbanked to banked, because you also build trust depending on the level, the type of communication.
Yes.
As long as it doesn't sound too robotic and it's a language that you prefer listening to, and it can be made that simple, then you can understand concepts like, saving. I need to save. Investing. I can borrow. Borrowing is not bad. I can invest. It's taking a risk. It could go sideways, but there's certain mitigations that have been put. You would understand that. Yeah. But just come and tell me, we want you to invest in the capital in the Nairobi NSE.
In the bonds,
or bonds.
Or equities, in equity investment. I agree with you completely in the sense that finance needs to speak a language that makes it more accessible. I think one of the reasons why financial inclusion has achieved a lot of success through mobile technologies is through the agent system, where there's a Mama Mboga who's sitting in a shop somewhere and she'll translate what M-Pesa means to you as a consumer in your language and in your context. Yeah. So what AI needs to do, especially from a knowledge and information perspective, is be the banking agent that you can trust, that speaks to you in your language and according to your context. There's a very interesting application of AI that I found Alibaba implements, and also there's a company called Toast. It does, it's over in America, does I think it's called cash flow undertaking. Is it underwriting? Yeah, cash flow underwriting. So what they do is they take all of the financial information that you give to them as a consumer, if you're, let's say, a small business, and that financial information allows them to be able to underwrite loans and give you access to capital at a much cheaper price off of the cash flows that your business is generating. You see, that's an application that is insane, because you've seen the success that we've had here in Kenya with something like M-Shwari or Fuliza, because there's a huge demand for cheaper and accessible cost of capital. Cheaper accessible capital at a favorable cost, and that lowered cost of capital. Here in Kenya, loans are 60% more than in Tanzania and Uganda. If you didn't know, but that's the thing.
Majority of them gets in a digital, not bank.
Exactly. And the truth about that particular statistic is that borrowing and lending, basically lending from banks in financial institutions in Kenya, is somewhat seen to be predatory. And that's why you're seeing a huge percentage of the youth actually, this is why the Hustler Fund is something that was a huge innovation at the time. It's allowed you to access capital at a cost that didn't feel too exorbitant, right? And I feel like that's the gap that AI needs to be filling as well, which is, how can I assess like risk and the credit history associated with this particular person or this particular individual or this particular business, and optimize them to be able to receive that to create that relationship between the financial institution and the individual. AI's biggest strength is assessing nonlinear relationships, showing us correlations that didn't exist before.
Yeah.
And things that we didn't understand. And I think that that's the greatest gap, one of the greatest gaps that AI can put. Aside from the trust that I told you about, I think it's also helping us understand each other between the lender and the consumer. I think that's the gap that's fundamentally there.
I think that solves, especially on the lending aspect. I think that understanding, that relationship, AI can curate it and make it so good, because I think I've had so many crazy stories where a friend of mine wanted to start he had a fruit shop.
Yes.
It's a small shop where he would sell a few fruits, and he wanted to open a second one. And the bank, where he banks the money every few days, when he's like, oh, there's a lot of cash, I can't keep working with this, he goes and banks it. Went to the bank, told the bank, I'm doing this business, this is my account, this is clear, you have my statement, I need a loan of X amount to actually start a second shop. His bank said no.
That's crazy.
They did their research, they're like, you don't meet this criteria, you don't meet this criteria. Now AI can actually come in and say, forget all this, because you could be told you have to meet these 10 requirements and you fail one. It could be something as weird as for the last 6 months your account should never have gone below 50,000 shillings. Then 1 month it was actually below, and now you're disqualified from accessing that service. And that means now you have to go start trying to talk to the branch managers, people in the credit departments, and they're trying to readjust to do your rates for you afresh. I think that whole bothersome process where it's a product and everyone is trying to squeeze themselves to meet the criteria of the product is going to be gone. Now it's people, and AI is going to be creating tailor-made products. For once, banks can actually say, when they say we are serving you, the you they're referring to is no longer going to be capitalized, as in you, the people. It's going to be you, as in
the individual.
You, the individual, or me, the individual. So it's getting to that point where, and it's such a huge change. And we always say incumbents don't like change. And I can imagine the first thing would be like, how do we track if we have 1 million? If I have 1 million customers and I end up with 600,000 new products for lending, how do I track? And sometimes I feel like it's also a technology issue, because incumbents have everyone spends a lot of money on tech. And then you're told, oh, AI is going to come, change it up, and it'll have this. And you're like, my return on investment on this. They're like, oh, my core banking, I have to open now 600,000 new products. Who's going to open that on the core banking? Who's going to...
but like, you need to realize, I think one of the core problems of AI in finance, especially in consumer banking, and that's just an observation from some of the research that I've done, has been, you'll realize that banks have a huge inertia when it comes to like taking up new technologies. And I'll give you this example. We often in the office used to talk about the cloud. You see, AI requires, like, you have to have the cloud as a service, a cloud SaaS product, especially for storage. You need to have this cloud as SaaS or infrastructure as a service, but it has to be cloud based for AI to be at its peak. You need to have that in your stack.
It would be too expensive to.
But you need to have
put it as on-prem.
We might say it's too expensive, but the only reason why I'd say a lot of banks go on-prem with their data centers, but the truth about it is, for AI to actually be effective, right? There needs to be a lot of data for it to correlate to, and for it to be able to be efficient enough to service you as a bank. And the worst thing about it is, we're finding that financial institutions that implement AI get superstar effects, where it's like, because they're servicing their clients better, they're faster, they're more efficient. Banks need to actually make that investment to join that competitive advantage and to get that competitive edge. And if they keep doing this whole thing of like, I'm not investing in technologies, I like, the cost of pivoting into this AI, the cost of adopting cloud is a problem.
But even when they do, because I've spoken to a few organizations in financial services, some in insurance, majority in insurance, but a few banks. And when you talk to them about their AI strategy, how they want to go forward, there's a first misconception I always get is, people always say, we have a lot of data, so we're going to hire a data scientist. I'm like, well, first of all, maybe get a data engineer to clean up your data. You may have a lot of redundant data that you could be setting your sights on, oh, we need an AI
Bias.
model to come in and predict for us, to do forecasting for us for the next 5 years, help us come up with new products.
Yeah.
But your data is so, I don't say, it's so poor, it's so
But
dull.
would you say you need a data engineer, a data scientist, or do you need an AI policy expert? Because that's where I'm going with it. Because like for you to actually be able to create an efficient AI model, you need, for example, perfect place to take it. Apple Credit and Marcus by Goldman Sachs and MasterCard partnered recently to roll out a credit product. A billionaire investor tweeted that him and his wife had a joint account, but he had 10x more credit than his wife. Why do you think that is?
It's a bias.
It's a bias.
It's a bias.
It's an outright bias.
It's an outright bias.
You see, if you just create a product off of the data that you have as a financial institution or as a bank, right? Then what might end up happening is that those biases might also translate into your products, and those biases will be outright and will actually end up putting off your customers. Of course, Apple is a big company. It was just another thing to tweak.
Yeah.
But when I saw that, it told me that even from an AI policy perspective, where the information, yes, the data integrity aspects have to be done, but also now the AI considerations outside of the data integrity considerations.
So I think the two would run. I would run the two in parallel. Now.
Yeah. It means now you also have to hire an AI policy expert or an AI an AI software engineer or an AI trained software engineer that to come in and actually know what they're doing.
Yeah.
So from the finance side, obviously, what I would care about is, okay, what value do I have at risk in each and every transaction? How am I accessing a new demographic? How am I engaging that demographic with the bank and the service that I'm providing or the product that I've just created? And so those questions now begin, AI actually answers those questions affirmatively if I have those other things in place. And that's what I was saying. You have to have a full fintech stack. We have to start with mobile. You see, in Africa, we have that. Mobile, internet, and then cloud, and then machine learning AI, then open APIs, which is another conversation. So like you need that full stack for you to even be competitive going forward in the global markets today. And I'd say in the context of Africa, I'd say we need a lot of policy around this now, because I'm seeing a lot of stuff talk on data protection and that's where we've gotten to. But how much thought actually goes into like AI as a product, like AI as something that's being run through in Africa, and how much thinking have regulators put into that?
Well, I would personally, I'd say not enough thinking. My personal opinion is that we don't need to come up with, every government is being tasked by their elected leaders, or those in power are being told, we need a law around AI, or we need regulation around AI. I have not seen, maybe closest I have seen is the US, where certain laws in different states are being challenged by AI. Things to do with copyright and so now my thinking is you need to get what do you call them? Those technical groups. People are going to sit down, both legal and both industry experts to sit down and say, let us review each and every law that exists, because AI is going to reshape all those laws. Because the Data Protection Act, I know we're going to finance for a minute, but you see, for example, data protection means you have a right to your data to be deleted, or in some instances like GDPR, the right to be forgotten. Now, how do you tell an AI model to forget? So there's something called machine learning that can cost, on smaller models, it's about, I think, $3 to $4 million to unlearn your data, Oscar's data. Now imagine models as big as ChatGPT. These large language models could be, I saw, I don't know if it's verified, but I did read that somewhere it's about 100 million USD, 50 to 100 million USD to unlearn someone's. So imagine today you find your photo is being used on Midjourney. So they spend 50 million. Then next week you find another photo of yours, they spend another 50 million.
Is that what you're saying? Is it like?
So you see, they could either bulk, like let's get all the queries for the right to be deleted, right to be forgotten, and we do them all at once. We unlearn at this particular time. Because machine unlearning is extremely expensive and slow. Because traditional, what would happen is we'd go to the data set, delete your data that you want removed, and then we'd retrain the model on the same data that have been trained on before, but without your data. But now that's just the data set. There are other things within the data set. So now you can target specific things within the data set to remove. And now that makes it a bit cheaper. And other people are trying to find more ways to make it cheaper. But already you can see there's a challenge where that if the data commissioner or whichever data commission, whichever country it says, you have 14 days to delete this person's data. Then they come next week and tell you the same thing because you're a company in breach. If it's GDPR, it's what is it? The percentage you're being taxed on your revenue, you're being charged for breaches on your revenue, plus the actual cost to spend millions of dollars to unlearn, to do the machine unlearning. It can
crash your business.
It can crash your business. So then that means that law needs to change. Laws around like children and people taking your photo, de-aging you, making you into a child, and these things end up in exploitative sites. That again, there's in so many laws need to change.
In fact, I don't know if you watched the video where it was a very scary video of how a family got used to posting their child online.
Oh yeah, I saw that.
And video. Then they aged the child on screen. I saw that thing. I was horrified. So yes, there's obviously a ton to think about when it comes from an AI policy perspective and an AI regulation perspective that I just feel like as financial service providers, as legal service providers, we just don't have that specific tool set. And I think we need to have, and maybe hopefully you'll bring in a speaker, for example, Boru. Shout out to Boru, who was our colleague who's now in NYU studying AI policy. Hopefully when he's around, you can have him talk on that, because I'm worried as somebody who really enjoys using ChatGPT.
Do you read the fine print?
I don't care to.
Don't worry. Our product is coming out soon, and you're able to read it. We'll fix that for you.
I don't care to. As a consumer, I was just running it for my lectures and stuff, and just learning more and just experimenting and playing with it. And I just realized we're so far. I'd say we're much farther ahead than we think. For example, in asset management, one of the interesting things is investors are using AI models to kind of predict the value of futures and options using nonlinear information, like stuff like that, where it's like I can tell the oil price based off of a certain event-driven strategy that AI has generated for me. And, it's like we're using AI to generate so much value already that a lot of people don't even.
Do you think such a tool would end up in a consumer's hand like myself at some point? Because I would, if I could invest, I would obviously might not have enough capital to sort of like buy into the DAO, for example. But if I could use that same AI to figure out how I can invest. No, like if there are startups who are actually building now consumer driven to allow you to just, it's the same way we are having a lot of people try to spend management apps. But AI can come and teach you how to invest.
It can, but let me tell you something. Another application of AI that you have you haven't even scratched. You've kind of touched on. There's a lot of. I'm sure you saw the whole GameStop saga thing, where there was a ton of pressure put on the stock by short sellers.
Hedge funds and billionaires took out a massive short position on the company called GameStop. A band of Redditors on a subreddit called Wall Street Bets called their bluff, drove the stock up to the tune of thousands of percentile more to force those hedge funds to liquidate billions of dollars in losses, while the merry band of Redditors gets rich. It's the ultimate David and Goliath story.
That type of play or that type of strategy, which is like a popularity-driven strategy, a social network-driven strategy, you'll find that now there's AI software that's been designed specifically to alert private equity firms, VC firms, hedge funds as to what particular stock everyone is buying and what might tick up at what instance. And AI automatically begins to ride up the rally and exit at the perfect opportunity without any human intervention.
That's similar to, there's actually some AI bots that were used in, there's a time the world lost $1 trillion
Tell us. See,
Yeah.
AI and finance. Get
Yeah,
fun.
that was, I think, was it 2017, 2018?
Really.
The New York Stock Exchange.
Uh-huh.
Luckily, they had a jailbreak. So what happened with the jailbreak is all trades which had been executed prior to that moment were rolled back to when the error occurred.
Oh my God.
And so they had a session where they called in all these CEOs and everyone. They were like, "Oh, that was a close one." And I was reading that from Superintelligence, I think by Nick Brosman or something.
Yeah.
My very, very, very nice book for like just getting your head into AI from
I'll read
from
that.
a non-technical perspective.
Yeah.
Just it's a very good book. When he mentioned that, I was like, so 50% of the trades in this market are driven by automated bots, AI
Exactly.
bots.
Exactly.
And the world lost $1 trillion, and in a few minutes, I think it was like 30 minutes, they got
Yeah.
it back.
The
Just
sharp,
roll back.
where the sharp action actually happens is all through AI-driven strategies by hedge funds. That's where the sharp action takes place. Where, for example, if an M&A deal happens, there are specific M&A arbitrage firms that have algorithms that are set specifically to ride the announcement, and then they know exactly when to exit. And that setting is obviously done manually by an expert, but you can imagine that as an AI-driven strategy. It's like buy until here,
Yeah.
stop until here, and like I found that really, really, really interesting to learn as well. But drawing it back to Africa, you know, where not everything is as sexy. I think I'd also want to, comment a bit on this new trend called mesobanking. And I think AI might actually be able to unlock a huge amount of value in that specific sector. Why? Because Africa has the missing middle problem, which is when you're a business that's banked or has like experiences, I'd say viable credit services, you tend to be called bankable. You're a bankable business. And before you get to being that bankable business, there's this dead zone where you're not. And you're between being a small little shop and you still aren't big enough to be able to afford the capital that's being, that to leverage the capital that's actually available to you. And I think that AI is able to include you using other, I'd say, factors. But like I said, off of your inventory movements, your cash flow movements.
Surprisingly, this was statistics by Credit Info, even how you save your contacts.
Crazy. See? Stuff like that. So
if you put the capitals, do you capitalize everyone's
what? So I need to capitalize everyone's
AI is learning a lot. Just how you save people's contacts
might actually be
is actually is a data point to actually lead to the behavior of how likely are you to repay.
Exactly. So that's AI's capacity to include those businesses. Because the SMEs consist of 60% of our our enterprise flair across Africa. So I'm really, really excited to see what that means. I'm also excited to see what AI means in the context of SMEs in agriculture, who really need a lot of invoice financing, where, just access to short-term finance to be able to fulfill daily orders and be able to scale off of those orders. And little things like those, I think research is proving that that's where it's going. I've seen Africa Development Bank have committed, I think, about $1 million into that. And we're seeing a lot more commitments. ABSA is also committing a ton of cash into making the credit services more accessible to that unbanked population. I also saw gender-sensitive financing, where women also need a lot of access to finance because they tend to build much more resilient business. Apparently, that's what the statistics say. And they also tend to have a much better savings culture, and they're much better creating value as businesses. We're seeing AI as being able to strengthen and include that specific demographic based on their needs. And once you have a structure like that, that revolutionizes everything. Even in the context of youth, I'd say, we're seeing a lot of where we can include a lot of young people a lot faster if we can get that data quicker. But obviously the problem remains, accessing that information and accessing that data.
Sometimes the information is there, but it's not machine readable.
Yes.
This is especially in cash heavy economies or sectors. trained to have a model, as in you'd probably have to do a lot of data entry, as in there's some hard work to be done, but it's not a reason to shy away from it, as in the impact that AI would have on financial services isn't little.
It isn't.
Yeah, and speaking of little, today's sponsor is Little Pesa. They offer digital loans, product financing, and asset financing, and short-term loans. Nice. So yeah, shout out to them.
Okay.
Yeah,
So
check them out on the Apple App Store and on Play Store.
I'm seeing a FlexiPay loan. Do you know what that is? Do you have any idea what a FlexiPay loan is by Little?
So it's stretched out, and you sort of try to dictate how many months. It's not those.
I need that.
It's sort of like, oh, come here. You want 30,000 and pay it in a month. It's like, you want 30,000. You want to pay it in 3 months, 12 months. Do you want to borrow it in stages? You need the 30,000, but you don't need all of it now. For example, if it's for your business, so you want the 30,000, like 15,000 this month, then 5,000 in a few weeks. Then
that's very cool.
Yeah.
Yeah, man. Shout out to Little Pesa.
Yeah.
I'm interested now.
Yeah.
Yeah, it's effective marketing.
Yeah.
I have a question for you. I just wanted to know if you could apply AI in anyone, especially in finance, in any one area specifically, why would you apply it there?
Financial literacy. I like there's this thing. I think it's about time. I think I've said it a few times at conferences, but no one ever really picks it up again. But someone once told me why it's because they can't see the return on investment. And I can see the return on investment. I don't know why banks don't see it. We have the banked and we have the unbanked.
Yeah.
Before then, we have the pre-banked. Those who legally can't open bank accounts, not because they don't have money or they don't meet the criteria for the bank. These are just people who legally, as in, they can't go in. Your 12-year-old can't go in and just say, I want a bank account. Or they'll be told you need a special type of account where there's a guardian or a parent who helps you manage that. These kids, you can use AI. Because right now, kids are stuck on YouTube. Imagine how easy it is to create AI-generated content, to do literacy in a gamified version, and your logo is there as Bank X, Bank Y, or as Little Pesa. And by the time this person is old enough to access these financial services, who are they going to thank for all this knowledge?
Yeah.
Who have they built the trust with?
Yeah.
So for me, AI doing justice to the pre-banked, because it's like, okay, fine, you're investing in teaching 10-year-olds who will open accounts in 8 years.
Yeah.
And you think it has not returned an investment because in 8 years you'll have shifted to another bank.
Yeah.
So as a CEO, as whoever's in charge of that particular revenue line, you won't be there. But the entity itself is actually preparing itself for, in the next 10 years, we're going to have an influx of 11 million people or 1 million people get onto our platform.
That's a very nice point. And a bank that used a similar strategy was Coop Bank. You remember the piggy bank thing that Coop Bank used to have? We used to have piggy banks growing up, and like if you want, they'll open an account for your son, and then can have a little piggy bank, and they can just be saving, and you can open your little account under under your parents, and then that generation was aged into the year accounts. So everybody who, if you started off, you wanted to open your first account, most Kenyans from 1993, 94, we've opened our accounts with Coop banks for a year. And after that, now here we are. And they used to have these events at Splash.
But now my challenge to that was they only taught you saving. Did they teach you investing, risk? Yeah. As in this, so the problem is why literacy is because people think of financial inclusion. We've always said it's access to credit or access. Just if you have money, then you qualify to be in financial inclusion. I can pick up 10 shillings on the road. Does not make me financially included. Where is the literacy that when I pick up these 10 shillings, I know its value? I know its value today is different from its value tomorrow. If you borrow from me 500 shillings, like today, I'm like, hey, Oscar, here's the 500 shillings you asked for.
Yeah.
Next week, when you give me that 500 shillings, the value obviously has changed. Of course, it's all other
inflation,
global economic issues, but still that has changed. Do I have the awareness to know that? Do I have the awareness to know, even with maybe 10,000 bob, I can start investing? As in that getting kids
financially
through gamification to just not do saving. That's the financial literacy that I want AI to do so badly.
It's your dream. Well, an observation I'd make is there a difference between financial inclusion and financial literacy and financial education?
Yes.
Okay.
Financial inclusion means you're in the 5, you should be in the all pillars. Okay. I think there are 5. Borrowing, saving, investing,
Yeah.
risk, and forgotten the fifth one. So you're in all those 5 pillars.
Yeah, that's crazy.
But-
how many Kenyans are actually financially included using that standard?
Exactly. Very few people actually qualify for financial inclusion by that standard. But of course, standards which are measured by
Yeah.
World Bank, FSD, those ones are all different. They are good, they work. I think this one is better because I can't struggle doing my taxes till date because I was never taught. There was no way I was taught.
Okay, yeah, okay.
And banks can actually teach you this and then still charge you for the
But-
same
but
service
would you
for
say-
convenience.
Yeah, would you say it's something to pass along to banks, or would you say you're now using AI for education? Because that's a whole other thing.
You could actually, you would shift it to AI for education,
Yes.
and then that would make it, you're not very, what do you say, it would make it an open market.
Yes.
Then I wouldn't feel any sense of like remorse, I need to pick this bank over that bank. But easily one bank can decide because the pre-banked space is huge.
It
How
is.
many people are under 18 in Kenya or don't have even thought of opening, actually
Yeah.
can't legally open an account? Target them, or can have one company target them, give out that free education. You're creating financial literate people
Yeah.
who, if they borrow better, if they save better, isn't the bank making more money if I have more money
To
going
save.
in and out of the bank?
Yeah.
They make more money. If I am a healthy, I'm financially healthy, then the bank is also benefiting. No bank says, oh, we have 10 million customers,
Yeah.
each with one shilling, so we are good with that. None is going to be, it's small, but if that small money is also moving, it's been invested, there are risks being taken on the money, there are returns for both consumer and the bank.
Yeah, I've
That
seen,
level
I've seen
of-
micro lending. I've seen a lot of micro lending, a lot of like small ticket accounts.
Yeah.
I'm saying, okay, I see and then if someone starts saving early,
Yeah.
they also get they get to build their credit history early, and I see exactly what you're saying.
Yeah.
I see the
There's
value of
there's
what you're
huge value. What do you think about AI in its role in finance? But in this case, African startups are always looking for investors.
Mm-hmm.
Now getting an AI to match investors.
Yeah, it's already happened.
Yeah.
There's a product by JP Morgan called Capital Connect that I found really, really interesting. There's actually two, so I'll start with that one. So what Capital Connect successfully did is they managed to match partners in different VC firms partners in different VC firms who have interest in investing in certain types of portfolio companies.
Yeah.
And so JP would go and tell them, oh, there's this very interesting portfolio company that we've seen as a partner. Would you be interested in investing there? You're familiar with that type of risk, and we'd be happy to front load some of the capital to you if it's a debt-driven business. And so they ended up growing. They used that strategy as a growth strategy for their VC investing arm. Another product is Mothermind. This is one by EQT. So EQT is one of the largest private equity. I think it is the largest, but it's one of the largest. Equity Digital is one of the largest private equity firms in Europe. So what they did with Mothermind is they created an AI platform that specifically maps out which businesses are like, it uses a plethora of algorithms. So which technology businesses are talked about, which technology businesses are interesting, which technology businesses are actually solving real life problems. And then they match that to any investment vehicles that they may have or they may possess, and then they approach them early on and create that relationship. So they now have a database of VC, I'd say VC investors, or I'd say portfolio company that would be very interesting to have for them, that match kind of their risk appetite and risk strategies. Yeah. And so when you see something like that, in matching investing, that obviously for Africa would be huge, because there are certain companies that are solving some really nascent problems and are not really that known. For example, so a company like Pick Up Mtaani, which is one of my favorite local Kenyan companies, that does last mile delivery and does it in that Pick Up Mtaani, has a Pick Up Mtaani brand, is really beloved locally. Or Chupa Chap, for example. How many VC firms actually have that on their radar? So I think AI might actually help bridge that gap and sift that information using those correlative capabilities.
You mentioned micro, and that got me thinking how we used to have products. And this is now moving towards the insurance side where we used to have insurance products, and then the insurance industry, because of a lack of penetration, they're like, oh, micro insurance.
Exactly.
Then we decided, oh, let's do embedded insurance. If you buy certain products at this amount, you get the insurance. You're told, oh yeah, this gets insurance for a year.
Yeah.
Then you can
That's
keep
clever.
paying the premium a bit later, or you can just forgo paying it. So when you're about to check at the cashier, then you're told, oh, instead of paying 800, you can pay 850 and get insurance for a year. Or so you have that. That was the embedded one. And as the weird thing where sometime I was really bothered by the insurance numbers in Kenya, and that was because mostly I listened to a lot of insurance startups. That was, I think, 2017. And I think it's changed. The market's definitely changed. A lot of them are just digitizing the third-party broker. And it felt...
It was a cost I was just passed along.
I was like, oh, it's not
innovative.
It's not innovative.
It's not
it's not going to penetrate into the market.
Yeah.
And so got me thinking, why we do not have why we don't have that penetration? It's not technology can help solve the problem. It's not a technology issue. I think it's a psychological and philosophical issue.
Okay.
If I have never seen Oscar get into a car accident,
Yes.
other than the fact that the law needs me to have car insurance, why would I get car insurance? Why would we even insure this entire set? Whose set? I've never heard of your set burning down.
Yeah. Okay.
So I won't get.
So you're saying it's a marketing problem? It's not.
It's how you market. You see, if lots of people are like, so I know so many people who don't need XYZ. Why do I need it? You won't buy it. If some guy comes up to me trying to sell me some fancy new thing, and it's like the best thing, and none of my friends have it, none of my peers have it, how is it the best? And the people who I think would have it if it's the best don't have it, or why am I the first one to first find out about it, not anyone else? So there's a psychological and philosophical thing to it. But AI can actually find out why, which actually item is it? What's your excuse for not being insured? Is it that you feel you are throwing money away? So it's like, do you feel is it a sunken cost fallacy that you have? Like, why can I pay these people this premium monthly, and at the end of the year, I don't use it? I'm paying, and I don't get sick. So that's a sunk cost fallacy. But if AI can determine yours is a sunk cost fallacy, mine is because all my peers don't have it, so I don't want it, then now it can re-engineer the marketing to suit you and to suit me differently.
But isn't that exactly what's happening today? I feel like
no, I don't think so.
I think so, but I think it's happening for different products now. For example,
not insurance products.
Not insurance products for sure. Then you see that's a marketing problem, because immediately you started, I was like, you're now touching on a marketing issue where, and the best case I can give that's outside of finance would be Glovo. Who needed Glovo? Nobody needed Glovo. Glovo just came and pushed it down everyone's throats. YouTube ads pushed hard, heavy marketing budgets. And now everyone uses Glovo. Glovo is a common word. Like Kenyans are like that. I think there's a lot of even something like if you look at fast-moving consumer goods, that's their strategy. The entire strategy is a marketing psychological strategy, and it drives sales. So you're absolutely right. But in the context of AI and insurance, I'd say the biggest value that AI can bring through insurance would be assessing risk, assessing insurable risk from certain businesses, the probability of those risks, and assigning that actuarial value to that business. So like you can imagine that actuarial value might actually be assisted to, get this person a loan at the correct amount, because they can be able to tell the activity of your business and how risky it actually is. That person can be able to get, insurance premiums reduced, because if they're overpriced or they're underpriced, so it gives them a nice negotiating standpoint. They might be able to arbitrage that insurable risk information across other businesses if there's other subsidiaries that they're working through in the organization. So there's a ton of use for that data that AI can actually be able to assist when it comes to insurance, or even individual insurance, for example. How many Kenyans can say, outside of your workplace, can say you've personally taken an insurance plan for you and your family, And why is that you've not been able to do that? And for you might say, maybe it's a psychological sunken cost fallacy, but it's also a question of I just haven't been matched to the right policy. And there's a policy available here that is actually fantastic for diabetes treatment. There we go.
Yeah.
And you see that creates another market, and that moves us from the 2% and slides the scale up to maybe 15, and that's meaningful.
Yeah.
So AI has a vast. AI opens up this whole world of thinking, and
Also introduces some dangers.
Yeah.
Because I think we've been on the sweet
side
for too long.
the sweet side of the mango.
when you started talking about the value, the valuation and the assessments,
Yeah.
it clicked in my head. Oh, deepfakes are getting really good.
Yeah.
So how good can a deepfake get?
In terms of facial recognition software and stuff like that.
Just facial recognition, yes, and also just my house in Turkana got burnt. I took some insurance on it. Took a few photos of the house when it's in prime condition. Tell AI to make it look like it got burnt. Sent the photos to the bank in Nairobi or the insurer in Nairobi. I'm like, by the time they send over someone, I'll figure out how to bribe that guy. So AI
Michael,
could also introduce.
We are concerned, guys. We are concerned as producers of this set about the scheming nature of this individual. He's created a problem and solved it himself.
No, I'm just actually thinking, any tool can also be used for harm. And there are some, we're not encouraging these harmful behaviors, because you could also use AI, as you could use it for fraud detection.
Yes.
You can use it to avoid fraud detectors, because most fraud detectors right now are not AI-based systems. So they are rule-based.
Yes.
So you just get your AI in there, and your AI will crunch and say, okay, well, we'll take 500,000 from this bank, move it via this transaction during this time over here to this account.
The only way I can stop that is by having an AI that actually checks for that.
Yeah.
So that's the sweet thing, that AI actually as a security tool and as something to build trust is something that the applications we're already seeing. Anti-money laundering, anti-fraud.
Yeah.
AI is actually really good at capturing that. It's like, no, this is my brother on the other side trying to do things that he shouldn't. And malicious AI is something that everyone's afraid of. No one wants to end up in a Skynet scenario.
Yeah.
I think I personally, as a watch of Terminator,
huge Terminator fan.
A huge Terminator fan. So a Skynet scenario is not something I envision, but I'd say there is a bad side to AI.
Yeah.
And I can say with the fact that Africa has such a young population that's taken up technology adopted it so quickly, means that there's a lot of gaps in regulation, in data security, information security, in infrastructure security, in critical infrastructure security. All the gaps are huge. And we've had this conversation a lot. And malicious AI can cause real damage to Africa's financial infrastructure before we even get started. Especially when you think about the fact that mobile technologies have really transformed African finance and African banking, or even impact investing and consumer behavior. Imagine a malicious AI waking up this morning and calling us a particular supermarket brand as putting out just fake news consistently for weeks. How that just affects a business. Yeah. Just that.
It's not something that you would think as a business I need to protect myself from.
Yeah.
Because you're like, okay, what's AI and finance, and okay, that reputational damage is not something every business worries about.
Yeah.
And it's so easily.
Yeah. And you and I both know, as people who've worked in cybersecurity before, how little investment goes into cybersecurity. Pennies especially in microfinance. Yeah. I remember there was once a client I had whose accounts were being run from an Excel spreadsheet for the entire bank.
I saw an Excel spreadsheet being used by a digital lender once.
Yes, exactly.
Wow, I was shocked.
Yeah, it's an Excel. It's a simple. It's not Intuit. It's not even that. It's not QuickBooks. No.
Scorecards. Scorecards.
Yeah.
For lending.
Exactly.
The math. Okay, Excel is a powerful tool. Let me not hate on it. It's very powerful now with the Copilot.
You shouldn't.
You can't
run a financial institution.
You
on
shouldn't.
That. And there's a CIO, and he collects a salary every month, and he drives home to his wife and kids every month. He's just updating an Excel spreadsheet and saying, I bought cybersecurity for the laptops. But it's like, okay, show us where the books are and what do they actually look like, and you open that and it's like.
So AI is introducing for the financial industry. There are certain new assets that have been created, like reputation now with deepfakes. becomes an asset to be insured.
Ooh, okay.
As a public figure, the damage that could be caused by a deepfake could mean your career ends.
Yeah.
Yes, that's usually what I usually say. That's the problem with the word deepfakes is the word fake, because the damage is real.
Yeah.
So we get a video of you, we get you saying something that is completely against what you believe in, you get cancelled. As a content creator, you can no longer make money.
Yeah.
But if now there was insurance for that,
Yeah.
because now AI has created that problem, AI will fix the problem.
It has also solved it for me because I pay that premium.
You'd pay the premium because it would be so easy. Because right now, what's happened in terms of like the deepfakes, what people are being told, AI-generated content should be watermarked. Yeah. It's not a law. It's just a thing when the large US-based AI firms went to the White House and said, oh yeah, transparency. It should be known. When someone sees AI-generated content, they should know it's AI-generated content.
Yeah.
They haven't given a timeline, they haven't given dates or promises of how they'll achieve this. So in the meantime, and these AIs are getting better at rendering human you can re-render this whole thing and have us talking about
Nyash.
or that.
Yeah.
So, and that gets posted on YouTube.
Yeah. And it's like they're saying, who are these guys? Cancel them. I get it, but in the context of finance, I'd say...
That's a new asset. So that, I would count...
I wouldn't call it an asset.
Isn't your reputation an asset?
But how would you rate it? How would you...
let AI do the math.
Like the math, the actual risk associated with that. Yes, it's existent, but in many ways it's unquantifiable. Hence, I don't know anyone who would be able to calculate a premium for that. But there are...
If you make...
there's something like keyman compensation, for example, or where sometimes when directors... the director of a firm messes up, the firm is insured against that, just to make sure that he's compensated in case there's any harm, and you're compensated as an institution in case he harms you. So there's products that exist for that. But I'd say in the context of facial recognition and deepfakes, because that's where we are, the biggest risk is towards things like, we open our phones with our faces these days. Yeah. So it's like, okay, if someone opens your phone and double taps your bank card and starts selling stuff, I think that's such a huge risk. Or if, eye recognition for safe software, where it's like, okay, somebody has a very intimate family item in a depository, in a deposit somewhere, in a deposit box somewhere, and facial recognition is what they usually use there, a deepfake can come in and just revolutionize that. Or something like facial scans being used for deepfakes for board meetings, and it's huge. Has huge.
Do you know what the solution is going to be?
Yeah.
And it's going to be a very bad one. I already feel that's the solution. I'm going to hate it. Guys will be told, from now on, wet signatures again. We're like, okay, so now we are fighting technology with
being arcane, and then
going back to the arcane life.
Then suddenly robotics comes in, and
that used to bother me a lot, because that bothers me a lot with our financial services in Kenya, especially the banks. When you visit the bank, when you have to visit the bank because there's a problem, because you can transact on your mobile or on web, but you find yourself visiting the bank because there's a problem. And what does the bank tell you to do? Oh yeah, just fill this form and sign. A signature does not match what's in the system. You verified it's me. You're holding my ID. I am here. This is it. There's like a million ways to prove it was me.
Yeah.
But that signatures have to match. And they won't show you that. They're like, okay, you can change the signature if you'd like. You have to update your signature.
Yeah, I think.
And then come back tomorrow to finish.
I have this controversial opinion. I think M-Pesa masks a lot of our inefficiencies. Just the M-Pesa service alone. If you tie it away from financial services in Kenya, you'll just see a huge naked, where the emperor has no clothes. The only clothes are M-Pesa.
I'm curious. Explain more.
Yeah.
I'm very curious.
Yeah, I think, the fact that mobile banking in Africa and in Kenya specifically has been taken up so much means that we've kind of gotten complacent with updating our banking technologies and banking services. Innovation in banking, innovation in finance in Africa, in Kenya specifically, has somewhat stalled. And if M-Pesa moves aside and begins to reveal the real state of the provision of financial systems, financial services, especially last mile financial services, you'll just see it's the same old sign here. I need you to put this stamp, this fingers, I don't know which signature. I need you to call 3, 4, 5 managers. That bureaucratic process of banking that's been there in the 90s is still going on now. The only difference is that you have it on your phone, but the day M-Pesa says, oh, that's gone now, is the day we are back to the old days, back to the post office.
M-Pesa is our last mile.
M-Pesa is our last mile connector, and that's kind of my observation.
Yeah.
But I think hopefully AI will also straighten us out as an economy. I think there's a lot of inefficiencies that exist in a ton of stuff here in Kenya, whether it's Forex, FX, whether it's capital markets, which is my personal passion.
Yeah.
I think AI can come in and really assist us, because it behooves me to think that we were ranked as one of the worst performing securities exchanges in the world.
Yeah.
And we have all this access to mobile technologies, 80% of us apparently financially included. These huge statistics as Kenya, but on capital markets, you can't raise capital through the securities exchange. It's like, what are you talking about? Like, if let's say your media company from Mind Over Machine picks up and you want to list it, you have to start thinking about listing in another jurisdiction outside of your own, simply because like there's little that's being done by regulators, by customers in investing in African businesses using the extra capital. These Africans would rather spend that money on betting sites than put it in a Safaricom stock, a Centum stock, a Mishia stock. Like,
Yeah.
I feel like that's the first problem AI needs to solve for me. Speaking about like what I'd want is that I'd want guys to be able to wake up and AI is recommending, oh, you have an interest in gaming, you have an interest in farming, you have an interest in agriculture. There's this really exciting business that we'd recommend you invest in because even your story kind of matches.
Do you know what that is? And actually, there is a company trying to do that.
I'd love it if they did.
So there's a company they've set up in Kenya, but they're still trying to get licenses and everything. But they're doing it, so it's a bit of what you're saying. So they do have they do use both AI and gamification to do crowdfunding. So not for the listed companies, but if you've decided to start like a men's healthcare thing.
Yeah.
So getting a loan from a bank is difficult, but you put up your story. People just donate. Or not really, it's not donation, but as in people will invest into your business. They'll get their returns. But a better way I thought of doing it was, what if you geotag? Especially where you have, because a lot of businesses in Kenya they're not all service businesses.
Yeah.
For example, like that one for my friend, he could have gotten guys from the estate who are his customers to invest in him opening up the second shop.
Yeah.
So a guy puts in 100K, he tells him, okay, that's 10% of the business you own now. You get to own 4%, you get to own 3%. And then the AI calculates when to repay these people. It's giving them, so now they are shareholders, they get to see their returns.
Yeah.
You've not visited you've actually just raised capital from your estate.
Yeah.
Sometimes you can raise it from, I just found it like a very useful thing, and I felt it would work in Africa because of the whole Chama concept.
It would.
Yeah.
I agree. I think there's no flaws. I have nothing to add or reduce from that idea. Yeah, because if I woke up in the morning and someone told me where I buy bread needs support, you're solving my problems every day. So yes, you're right. If you localize a product for me and contextualize it, I'd be like, yeah, Mama Kinyi needs to buy tomatoes.
Yeah.
I have an extra 15 shillings. I'll send it to her as long as she pays it back.
Yeah.
And it creates that relationship. So I agree.
Finally, AI is finally democratized in finance.
It is.
So now you don't need 1,000 bob for you to save, invest, or to do all those 5 things.
Yeah.
Now that financial inclusion is being democratized, that it can reach anyone. Because you could get it as an SMS alert that, so-and-so is now opening a second garage next to home. So-and-so is doing this business. And it's a business you've seen, you've used, you've worked at,
you have a relationship.
You have even a relationship with the business owner because you buy from that business owner. And then you just you just go to M-Pesa and
They should hire you as a founder because that's crazy. I'd actually invest in that. That's genius. Because farm, I can tell you right now, if I was walking through South Sea where I grew up, and that shop where I used to play PlayStation it's a business I have a fond memory of. If it shut down, and I remember the feeling of damn. Or Baker's Corner, for example, which is hopefully can sponsor this podcast. Baker's Corner is where I've been collecting the sweetest donuts in my entire life. In that specific store, it's in South Sea. If they ever put out an APB saying, as a South Sea business, we need 1,000 shillings so that we can be able to fulfill orders. We'll pay it back as 1,200. I'd love that.
Yeah.
I'd love to be a co-investor. So I think you're right. And I think...
let's look at that as our startup before the episode is out.
Before this drops, if you get a text from Mama Kinyi, you know it's both of us. Yeah. Well, but you're absolutely right.
Yeah.
Yeah, it's a good conversation.
Yeah, it is.
Yeah.
So, Oscar,
Yeah.
thanks so much for coming.
Always.
I think I've enjoyed this conversation. There's a lot we've not touched on.
There's a
And
lot we haven't,
we could have some more sessions just going on around this.
Yeah.
But I think probably a nice way to start the AI finance conversation.
Yeah, but there's also something I would want to touch on before we go, which is AI and climate change in finance.
Okay.
I think that's another really exciting place to go.
Yeah.
Because obviously now everybody's financing strategies is going green. Everybody wants to go green. But I want you to imagine the relationships that AI can draw, or the climate-related risks, because we're talking insurance as well, that AI can be able to inform bankers and financial institutions whenever they're lending to certain businesses. For example, if this business is on the coastline of Bahamas or the coastline of Lamu, and there's a tornado that's coming there that's been projected, AI can be able to say, okay, this particular business is exposed to this particular climate-related risk. Or you want to loan to a farm in Marsabit. Marsabit is fruitful this time of the year, but at this time of the year, productivity drops. So we can put that as the cost of capital can be weighted in to include that risk. You understand?
No, I understand.
So you see, like, climate change now has an implication that's directly showing up in the banker's balance sheet and in the banker's loan book, right?
Yeah.
And if he's able to say that I'm actually investing in businesses that are climate resilient, then he's able to access much more greener funding.
Yeah.
Yeah, I think that's another business I'd want to do if I had money.
That's an interesting one. Now that makes me think of a butterfly flaps its wings and there's a hurricane here.
Exactly.
The weather changes in area X, it affects farmers growing ABC here because maybe that's where they get the seedlings and all of that stuff.
Precisely. And now you see, if I'm able to know that as a financial institution and as a banker, I can price in that risk even in my WACC, which is the cost of capital. Yeah. Or I can price that in the context of, look, this particular company is producing this much green value in the sense of carbon credits, in the sense of it's a business that's actually reforesting or increasing the value of the biodiversity of a certain area. Yeah. I need to think about that business differently. I need to structure it differently. I need to give it access to much more credit, and I need to grow it because at the end of the day, it's much more climate positive. Yeah. So if AI is able to give us that as a value, then it will not only have saved us money, made money for us, it will also have saved, in a sense, our own lives. True. So that's like peak.
Oh, that's save our own lives. That's such a touching point to end with. It's poetic. I'm like, don't ruin it.
Yeah.
Thank you so much again for coming. Cheers. I'm sure we'll have more conversations around AI and other.
I'm happy to learn. Guys, I am not an AI expert. We're just brainstorming. We're friends brainstorming. Yeah.
Thank you so much, Oscar.
Cheers.
Hope guys you've enjoyed this episode of AI and Financial Services. Don't forget to like, share, and subscribe. And goodbye, wherever you are in the world watching this or listening to it.
Bye-bye. Peace. Like, share, subscribe. Like, share, subscribe. Like, share, subscribe.
Like, share, and subscribe.